There are, yes, 22 days left until the deadline, August 2nd. So should investors be concerned about this deadline for the debt ceiling? We're joined now by Dennis Hynes. He's the chief market strategist, RW Pressprich. Also with us, Robert Nichols. He is the president of the Financial Services Forum. Robert Nichols was part of a group of business leaders who met with Treasury Secretary Timothy Geithner yesterday to stress the importance of raising the debt ceiling. Gentlemen, good to have you with us. Rob Nichols, I want to begin with you because the meeting yesterday took place where? At the Treasury, and also in attendance, Deputy Treasury Secretary Neil Wolin was there. What's the room like? What's the setting like? You and business leaders meeting with the head of the Treasury. What's the feeling? Is it impressive and a little bit awe-inspiring?
Well, Pimm, thanks for having me. I actually served as an assistant secretary in the U.S. Treasury Department for about 5 years, so I'm pretty familiar with that room. But yes, anytime you sit down with the Treasury Secretary and his deputy, Neil Wolin, it's obviously an important gathering. It was about a half dozen leaders of large associations representing business groups and the financial sector. And the meeting, as you would imagine, was to talk about the importance and the critical reasons that we have to raise the debt ceiling. So that was the scope of the meeting. And we had a very good exchange of views. We spoke for about an hour. Obviously, the Secretary of the Treasury is playing an important role in the talks, and we talked a lot about the economic consequences and the conversations we've been having with members of Congress, just so everyone does understand that default is not an option. It would have very significant implications for job growth, economic growth, for the dollar, interest rates, the deficit itself, government operations. So we had a wide-ranging conversation talking about all of the reasons why default is simply not an option.
But Rob Nichols, I'm assuming that Treasury Secretary Geithner already believes that. I mean, this is what he said previously. So why have the meeting with him? Is it to give him added firepower, to give him more motivation to seek an agreement to support his views?
Well, he obviously they called the meeting. They called us in, and I think part of it was just to have an exchange of views on what each side was hearing as the talks are going on. You know, there's a lot of efforts within the business community to communicate to members of Congress, both in the House and the Senate, Republicans and Democrats alike, on the critical importance to come together and arrive at a deal before the 2nd of August. That's important. So one of the things we talked about, of course, is today, Pimm, we sent a letter, myself and 469 other CEOs representing every aspect of the U.S. economy, energy, manufacturing, healthcare, ag, tech, trade, to talk about the critical, all the reasons that we have to raise the debt ceiling, why default is not an option. So some of the meeting just centered around what the business community was doing to try to at least continue to communicate with Congress why we absolutely have to get it done, why August 2nd is a real critically important date, and what would happen if Congress was unable to act and we were not able to resolve that by the 2nd.
Dennis Hynes, investors, they don't seem particularly perturbed about this debt ceiling. The cost of U.S. debt doesn't seem to be rising, but you say also watch gold.
Well, I say the following. I say that the chances of the debt ceiling not being raised is probably less than 1% or about 1%. And the reason I say that is that we've done this 75 times since 1962. We've altered and raised the debt ceiling. So this would be the first time out of 76 times that we would not do it. So that is not even on the cards.
So they raised the debt ceiling.
They raised the debt ceiling.
But what about gold? You've been saying watch the price of gold.
Well, that's correct. Okay, the gold price right now, as you saw it today, it rose.
Record.
20, yes, exactly. Well, it traded, didn't close above the record.
No, but it traded.
1577. I believe it traded to 1575, but 1577 is close enough for government work, which is what we're really talking about here. The government needs to do its job. Now, the question is how does this debt ceiling get raised? How does it do it? Does it do it with compromise? Does it do it with capitulation? It really depends. If, in fact, it's done irresponsibly, gold can rally. Gold can rally, easily take out the highs, could trade all the way above 2,000, could even get to $2,400. So the fact of the matter is, it really depends upon how it is structured, the debt ceiling raising.
All right, gentlemen, I want to thank you. We got to watch what happens. August 2nd, the deadline. Dennis Hynes, RW Pressprich, and Rob Nichols from the Business Forum.